Hey, if the stock market has always seemed kind of complicated or even a little scary, don't worry. You're definitely in the right place. We're going to break it all down, super simple, step by step. So let's just dive right in. I mean, this is the dream, right? Taking $100 and turning it into 1,000, that's the whole magic of investing. And you know what? It's totally possible. But before we get to the fun part, we got to face a pretty important reality check. And yep, here it is. The hard truth is, most people who are just starting out, they actually lose money. And the reason why is almost always the same thing. They just jump in headfirst with zero clue about the basic rules. They start treating it like it's a Vegas casino, you know? But here's the secret. Smart investing has nothing to do with luck. It's all about knowing how the game is played. All right, so let's build that understanding right now. We're going to go from confusion to clarity by pulling back the curtain and seeing how this whole thing actually works. I promise, it's way more straightforward than it sounds. Okay, so what even is a stock? You might hear it called a share too. It's honestly super simple. Think of it like this. A stock is just a tiny, tiny slice of a company. So when you buy a share of, say, your favorite tech brand or coffee chain, you're not just a customer anymore. You're literally becoming a part owner. How cool is that? And this is where the magic happens. When that company does well, they sell more stuff, they innovate, they get bigger, that little slice you own, it becomes worth more money. It's that simple. When they win, you win. So how do you actually make money from this? It really just comes down to three super simple steps. One, you buy a share when the price is low. Two, you hang on to it while the company does its thing and grows. And three, you sell that share when the price is higher. That little bit of extra cash on top, boom, that's your profit. Let's make this real with some actual numbers. Say you buy one share of a company for $100. Then they have an amazing year, and that same share is now worth $150. If you decide to sell, you just pocketed a $50 profit. And that's the whole game, really. You just try to do that over and over again.
Okay, so if it's that easy, why do so many people lose money? Well, it almost always boils down to one single thing: emotion getting in the driver's seat instead of a solid strategy.
Oh yeah, this is the classic rookie mistake. Somebody hears a hot tip from a friend or sees something online, and they throw money at it without doing any homework. Then what happens? The market has a little dip, just a normal down day, and their investment goes down a bit. They totally freak out, and they sell everything at a loss. And just like that, their money is gone. So this really shows us there are two kinds of investors out there. You've got the emotional investor who's basically on a roller coaster, right? They panic and sell every time there's a little bump. But then you have the smart investor. They stay cool as a cucumber. Why? Because they've got a long-term plan, and they know that these little dips are just noise. They're part of the journey. And this quote just says it all, doesn't it? The market itself isn't the risky part. It's just a tool. The real risk is making bad decisions. Jumping on a hype train without a ticket or panic selling at the worst possible moment. That's where the danger is. So how do we make sure you become one of the smart investors? Look, there's no secret handshake. It's all about following a few simple golden rules. Think of this next part as your personal blueprint for success. All right, rule number one, and this one is huge: diversification. You've all heard that old saying, don't put all your eggs in one basket, right? Well, this is exactly that, but with your cash. Instead of betting everything on one company, you spread it out across a bunch of different ones. And why is this so important? Well, think about it. If one of the companies you invested in has a really bad year, it's not a catastrophe. It doesn't wipe you out completely because your other investments are there to pick up the slack. It is, without a doubt, your biggest safety net. Okay, so if you remember nothing else from this, remember these three golden rules. Number one, invest for the long haul. We're talking years, not days or weeks. Number two, diversify. Spread that money around. And number three, stay patient. Stay calm. Don't let fear or greed make your decisions for you. At the end of the day, successful investing is not a get-rich-quick scheme. It's way more like planting a tree. You have to be disciplined, you have to be patient, and you have to give it time to grow. But over the years, it can grow into something really powerful and substantial. So, we want to leave you with a question. Now that you've got the basics down, you can see that smart investing isn't about gambling at all. It's about being an owner, having a strategy, and being patient. You've got the rules now. The only thing left to ask is, what's your first smart move going to be?